Hey, welcome everybody to another episode of the Presidio Perspective. We're talking about real estate today. I have a good friend with me, Steve Welty, President, CEO of Good Life Property Management. We're going to be talking about the local real estate market, the benefits of investing in real estate, missteps made by landlords, and a little overview of what's to come from legislation in the local markets. We've got a great show for you. Glad you're here. Let's get it started. All right, another episode of the Presidio Perspective. Man, I'm stoked to have you, Steve.
Yeah, man, good to be here, man.
Yeah, you know what? This is something that we get asked about all the time. I'm so glad that you were willing to come on the show. You have so much to offer. Steve's been in the real estate game for a long time, just about as long or longer as I've been in wealth management. I know you have a great perspective on what people should be looking at. And a lot of people have a lot of questions regarding real estate. You know, how long can this keep going? Is it a good time to invest?
Right.
The new advent of Airbnb and rentals and all the rewards and the risks that are out there. So I think it'd be just awesome to have you here and probably be getting you back in the future too as this market keeps changing.
Yeah, man, I appreciate it. I mean, I'm in an interesting position as owner of a property management company. You know, we manage maybe 900 houses, condos, apartment buildings for people in San Diego County.
Wow.
And so we're kind of in the middle of a lot of different, avenues, vendors, owners, tenants, investors, all that stuff. So yeah, I'm excited to be here and talk about it.
I mean, 900, properties, you think about, 900 landlords and tenants and then all the vendors. I mean, those are a lot of conversations. That gives you a pretty good overview of what's going on, I would imagine.
Yeah, and it's getting more difficult these days. Kind of our mission at Good Life, I started in 2012 and built it up since then. But our mission is really make owning rental property easy because I've always been fascinated with the benefits of real estate, owning real estate, but it's hard. It's like famously, Warren Buffett had said, if I could, or I'd own, if it was easy to manage, I would own, I can't remember what number he said, but I'd buy 100,000 houses or something. Do you remember the quote?
Yeah, no, I don't, but I know what you're talking about. Yeah.
Anyway.
It's a challenge.
Yeah, but I guess a bunch of venture capitalist people heard that and actually took him up on that because now that's a common thing if people are buying tons and tons of homes and, pooling money. But yeah, so, and especially in California and San Diego, it's even harder to, do yourself, and we can get into some of that. But yeah, that's our mission, make it easy for people so that people can stay in the game. Because really the manager, if they're not good, they burn out and they sell. And that's just like a tragedy to me.
Yeah, no, exactly. It's like any business, right? If you're frustrated with it, it's not being run properly and it's taking too much of your time, sapping your energy. There's a lot of people who don't want to do. A lot of our clients are looking at retirement and what do you want to do in retirement? I want to make money and not work.
Yeah.
And so that's like where you come in, owning homes easy.
Right.
I love it.
Right. Make money and not work. And it's funny, I think management has evolved so much in the last 10 or 15 years, and people usually did it themselves for so long. But like, I often get calls where people are like, do you take like one client? Like everyone thinks like we only work with institutional investors or something. It's like, no, we actually specialize in working with one client. Like we specialize in the mom and pop landlord. There's, a few different customer types we work with, but like the first time landlord, the person that inherited a property, the person that's been self-managing. This is a bigger pool of our new clients now, is the person that's been self-managing is now retiring, the boomer.
Yeah.
And the people that have been burned by other management companies too. So, some of the things we like to focus on is we're big into education. So we specialize in working. We got started working with that first time landlord, and they need the most handholding and the most education. So we really planted our flag in content and education, kind of like what you're doing with this podcast, which I love. So if people check out our YouTube or our blogs or whatever, it's like we want to lead the industry in kind of helping people navigate the property management space, whether they hire us or not. And so that's kind of helped us get a lot of referrals, build trust up front, and it's been a good game for us.
Yeah, awesome. And I've looked at your videos. There's a wealth of content and knowledge in there, and I appreciate your game as well on the education front because there's just so much to know. So we'll make sure to get that out to all of our listeners. It's really cool. Awesome, man. So yeah, you talk about that first-time landlord. So I know that I've come across a lot of this in my business and counseling people on their wealth. But is that a lot of times like, hey, I own my home and I'm buying another one, I'm upgrading or I'm downsizing, and then maybe I keep this one? Is that what you're seeing a lot?
A lot more now than we used to. So we went through a wave of the rent versus sell decision. I would call it. And I can't remember the exact year, but it was maybe 2015, 2016. And I was like, we're getting this question so much. I got to figure something out. So I did a video and found this spreadsheet online that some accounting firm had made. It's like a rent versus sell spreadsheet. And we can link to the video maybe in the episode. But people were fascinated with like, should I rent or should I sell, and the things to look at. And so that was kind of helpful to have them go through that. But now that conversation is happening a lot less frequently. People are like, I'm renting.
Yeah.
Like it's starting to look kind of like 2008, not just with prices, but with like in 2008, 2009, when I actually first started in management with a different company, fish were just jumping, like management accounts were falling from the sky because nobody could sell. People are upside down.
They're upside down.
Yeah. So
they didn't have a choice.
Exactly. Yeah. So we just got a lot of business from that. And then once the market started picking up, people just started selling. But now I think people are seeing what's happening with equity increases and rent increases and they're like, hey, if I'm moving to Minneapolis for a job, or maybe I'm trying Nashville, or there's a lot of, people leaving San Diego, I'm never going to be able to come back.
Yeah.
So I have to hold on to this house.
Oh, yeah.
You know what I mean?
Absolutely. We tell people that all the time. And we've had people leave California and come back.
Yeah.
And have to buy, their same house for an extra 20, 30% or buy a lesser house.
Right.
Because it's hard to, compete for what we have here in Southern California, right? And we have a lot of things that we like about this, proximity to the beach and the mountains, and and you can get frustrated with the politics or the taxes, but you're going to be dealing with some other stuff wherever you go.
Right. It's hard to run from, but
yeah.
But the conversation it never gets old having is with these clients who aren't savvy investors. That it's usually their house and they're thinking about renting or selling it. And I get to walk them through kind of the different things to think about. And I love when I get an intro from an owner. He's like, I'm just like going to break even. So I'm considering selling it. I'm like, oh, if you knew how lucky you were, sir. You're going to break even. That's like mega good spot to be in San Diego, because this is an appreciation.
When you're just starting out, right? And the market's high. And
exactly.
Yeah.
Well, I mean, because there's two types of markets. There's appreciation markets and cash flow markets. And so
I love that.
Yeah. Like it's just to simplify. I'm a simplifier, so everything I say you're probably going to be very simple, but that's how I roll. So essentially Midwest cash flow market. You're gonna own it 10 years. It'll go up $13,500, and you'll make $13,500 a year in cash flow, right? So that's great. San Diego is appreciation. It's gonna go up $350,000 in a year, which I've had clients who. I was telling you a story before we went on about a client who really wanted to sell his property because he was convinced the market was going to tank in like the next month.
Right.
And I'm like, Deji, just chill out, man. I don't think it's going to tank in the next month. This was 18 months ago. Anyway, we had some trouble with the tenant, and COVID happened, all this stuff, and he begrudgingly beating his head against the wall for 18 months, couldn't sell his property. All that time, it probably went up $250,000. He recently just sold with our team, and I talk to him. I'm like, Deji, it's worth it, right? You know?
Good for you.
Yeah, but
keep it a minute, and good for COVID too.
Yeah, exactly. But
it's good to be lucky, also.
Exactly, it's good to be lucky, right? I can't say I had anything to do with that, but breaking even when you talk about the different ways real estate pays, like the appreciation, number one, which most people know about. But what most people focus on is the cash flow. They're like, oh, I'm going to be breaking even. Well, you're not also looking at the debt pay down, where a certain portion of the mortgage, the tenant's paying the principal down.
Paying down principal.
Yeah. And then I get to walk people through like the depreciation and other tax benefits of owning the property. And so just that whole conversation opens up a world of, oh, really interesting. And so, I want people to do what's best for them. Some people just don't want to own it. They don't want to hassle. They worry about it. Okay, great. Then sell it. But otherwise, there's some other things to look at.
Yeah. I mean, when we think about, what we have ahead of us, one of the things that we talk about a lot in our coursework is our 4 genetic defects of our financial DNA. One of them is we buy high and sell low, which, you were just commenting on of what people look to do in real estate sometimes. But number 2 is we don't understand inflation. And like everybody knows inflation, they could probably give a textbook definition of what inflation is, but we just don't use it when we make financial decisions. And that's why that spreadsheet and modeling things out over 10 years is so important. Like if you want to read the book of what you should do in inflation, you should borrow as much money as you can and buy assets.
Yeah.
Because in 10 years, that debt's going to be worth less and those assets are going to be worth more. And that's how inflation works.
Yeah.
And then what is inflation? It's the cost of living. What's the number one component of the cost of living? Rent.
Yeah. Yeah.
So, if you're like, hey, I'm really concerned about inflation, well, this might be a sector you should dabble in.
Yeah.
Right. I mean, and there's ways to structure it. And again, a lot of people will get to these mistakes that people make, right? Not getting there. But so anyway, so there's some interesting things going on with the market today. And I do want to get to those mistakes because I think they're really important. But, so here we've had a fantastic run.
Right.
Okay, over the last 10 years, San Diego Case-Shiller Index, this is the home price appreciation of the average home of the of San Diego homes, the average, has increased by 9.6% compounded annual growth rate over the last 10 years. Wow. So about a 10% return.
Yeah.
And again, that's the home value. So if you had a mortgage, say you had, 50% loan to value, you have to multiply that growth by 2.
Mm-hmm.
So you really got like a 20% return on your equity over the last 10 years.
Yeah.
It's insane. And during that 10-year period, I mean, if you hadn't invested in real estate before, you've been lulled to sleep. You've had some really nice times and only nice times. You've only checked Zillow or Redfin or wherever you go to see the value of your home, and you have never seen it not 1 month go down.
Yeah. What's interesting about Zillow is I always tell people, they're like, well, Zillow says it's this. I'm like, Zillow is always high.
Yeah.
But lately, it's actually been right a lot because prices got so crazy. But I was listening to an interview with one of the owners of Open Door, and I think he might have been partial, but he was saying how Zillow's the algorithm's made to be high because they don't want, if you tell them their house is worth less than they think it is, they're never going to come back to your site. But yeah, I mean, it's becoming more and more correct every time I check it, and so it's interesting.
I don't know that's almost like a self-fulfilling prophecy right there. I think about it as people look at Zillow and they look at those home prices and the algorithm means they're high. It's like, well, but if that's what everyone's looking, then that becomes the normal.
Right. Interesting.
And that's what everybody now thinks because that's what the internet says and that's what we're conditioned to believe in. So what other data point do we have?
Where it is
that's
reality.
The price. That's the value. Right? I mean, what else are you going to check? So
exactly.
Very interesting there. So I'm going to think about that when I'm thinking about what the future might hold. So what we've seen over that 10-year fantastic growth period is, people own their homes, either their rental properties or their current homes, and they're looking to make a change, and they're sitting on a pile of equity right now.
Right.
And so they're saying, what should we do? This is kind of a decision point. And so what are your conversations to those people?
So it depends if they want to keep the home. I mean, they can always pull some cash out through a refi or whatnot. But that's
tax advantaged, right? They don't have to recognize the capital gains on the sale. They can get it. Interest rates are still incredibly low from a long-term historical perspective. So,
right. Yeah. I mean, if they're trying to earn a return, I'd send them to someone like you, right? It's like a wealth manager or someone to see what their options are. But there's really 2 ways people look at these things. One is the simple approach. And I love what this one gentleman said. I can't remember his name, but he's like, simplest investing strategy is never sell a home you lived in. There's these simple tried and true ways. Own a property in San Diego and never sell it. It's like there's one thing you could play with all the rest of the money you have. House is money. And if you do nothing but leave that house to your child, you'll be fine if you have kids or whatever.
Right.
So there's always that, it might not it's probably indefensible from a financial standpoint to just let a bunch of equity sit in your house.
A lot of our clients have it. It's like their long-term care insurance plan or it's their estate plan.
Sure. Right? On a spreadsheet, it's not going to make sense, but some people just like the freedom of owning their house with.
But I'm talking about not selling and renting, right?
Yeah.
I mean, that's going to be a pretty challenging thing. We would definitely not recommend to do that, because you lose control. Your biggest expense is now linked to inflation versus fixed for 30 years.
Right.
Right. And so that math kind of really gets away from you pretty quick. So it's like, kind of going back to your spreadsheet, should I sell or should I keep it? Right.
Right.
I mean, when I look at a 10-year run at almost a 10% annual growth rate and the long-term averages are 4 to 6, so I'm like, okay, the market's high. I mean, we can't predict. No one has a crystal ball. We don't know but if I'm going to look over the next 10 years, I'm not forecasting another 10% annual rate of return.
Yeah.
I wouldn't plug that into my spreadsheet.
Yeah.
So, I mean, it really comes back to that time horizon, right? When you're in real estate, and we'll kind of go through some of the past experiences that we've had in the bad times, right?
Right.
And I was in this business in 2005, 6, 7, 8, and I saw, people's paper net worth evaporate. right? And so, you don't have any money until you sell.
Right.
Zillow can call it whatever it is, whether that's true or not. But until you sell, it's just a number on paper.
Yeah.
And so, I don't know. For us, we say, real estate is a long-term investment. Sure. And there's ways to do it. Professionals do it in short term. I'm sure you know how to make money in the short term, and there's house flipping and all that kind of stuff. But I'm just talking about this buy and hold strategy that you have. It's like, you have to be really long-term because there are down markets. And I don't know, you could probably pick very few better times in history to pull the plug. I mean, we're obviously at an all-time high of what the price is.
Right. Yeah. I mean, it's time horizon. It's like, what are you going to do with the money? That's what I ask people first when they're thinking about selling. They might be boomers towards, the end of their career and want to use that money to retire and live off of it. Yeah. That makes a ton of sense. But, a lot of these people I'm speaking to are in their early, mid-30s, mid-40s. And they're having a break even on their rent. I'm like,
they want to grow. They need to grow. They need to be focused on accumulation, growing that balance sheet so that they can be financially independent one day.
Exactly. And what I hear a lot of people worried about is like the legal landscape. And I think these laws are just getting crazy, and it's harder to be a landlord, and we had to let our tenants live rent free for this time during COVID. And so I hear that a lot. But what I tell people is I say, look at the places with the strictest rent control and the strictest laws: San Francisco, LA, New York. They all have the highest property values and the highest rental values.
Yeah.
Because when you try to treat symptoms, which is what they do with laws like this, generally speaking, and some of them they're usually well intended, and some of them are okay and good, but it ends up making the problem worse.
Yeah. It creates other problems.
Yeah, it creates other problems that you didn't know about, right?
Yeah.
Unintended
now
consequences.
You're going to deal with that.
Yeah.
Right. Sometimes the medicine is worse than the actual disease.
Right.
We get a lot of questions too right now. There's a flurry, as I'm sure you know, of this Airbnb, VRBO. People are making money hand over fist. The economy is really hot. People out of COVID want to travel, and they're making so much money. And we did an episode a couple of weeks ago about not being distracted by shiny objects.
Oh, okay.
Because you're just
smart.
People, out of the COVID boom are chasing all the YOLO tech stocks and meme stocks, and that hasn't worked out, too well. Now they're piling into oil or whatever. So you're always chasing the thing of the day, which usually doesn't work out, but or it has a lot of risk, right? So let's talk a little bit about this Airbnb market. I mean, so we have people today saying, hey, I'm interested in taking some of my cash and going into this market.
Yeah, I mean, your time is your most important asset. That's if you're asking my opinion. So the first thing I would consider is, are you okay with being a property manager? And at a high scale, being a hospitality manager, essentially, because that's what Airbnb is. Your attention, you're going to get texts. I mean, I actually have not ran an Airbnb myself, so I can't speak from experience. But I would imagine you got to respond to people's texts. You got to tell people, issues come up. It's going to be similar to property management, just probably a lot more urgent and intensive. So that's first and foremost. But, I know people that work for me. 2 of my employees recently have bought Airbnbs. And one of them told me the other day that they already paid their mortgage off for the year. Yeah. And they bought it like earlier this year. So from a financial standpoint, home run, it seems like. Now, you brought up a good point, and you want to talk about what you said with.
Well, I just, there's, people ask me, do you think the market's going to crash? And I would say 100%. I just don't know when, so we always kind of just want to make sure we know what we're going to do in there. So when the next recession comes, right, whatever that is, if that's, there's a lot of warning signs going on right now. But hospitality is the hardest hit sector in any recession. I mean, it makes perfect sense. People lose their jobs, incomes fall. We have inflation where the cost of gasoline is eating into that travel budget. Right. People are tightening their belts right now. Right. And I mean, you see it. I mean, you're probably doing it yourself. We're all kind of doing it. And what are we going to do? And so what's the, one of those first things that gets hit? Yeah. And so, in 2008, the number of hotels that went under was staggering. The Big W here in San Diego was a bad story. I mean, these beautiful hotels that people would frequent were empty. Couldn't get anybody, couldn't give the room away. Right. Sounds like Airbnb.
I think that's such an important point because I don't hear many people talking about that. I think people generally assume that Airbnb is like this thing that will just always be good and always happen, and that it's not a hotel. It's like has this unique position in the market that will always be and it could be, get less hit than that, but
Well, you have to drop your prices. I mean,
Yeah.
so that's what hotels do. So they can charge, it's called a RevPAR number. I think revenue per available room
Yeah.
is how they measure. So they don't always book full, right?
Yeah.
'Cause that's how they can kind of drive prices. So people who are running Airbnbs have to kind of learn that hospitality. And I know some of them are doing really well in it, and they're interested in running it as a business.
Yeah.
Right?
Yeah,
And
totally.
So you could do a really good job. But I think also with anything, when we're just focused only on the reward, you're missing the other part, right? And so real estate, just like investing in equities in the stock market, it's like, yeah, there's the reward potential and there's the risk potential. And I think a lot of people going into that business understand big reward, bigger risk.
Right. The most important plan is for you to plan for the plan not going to plan.
Yeah.
You know what I mean?
I like that. I don't know if I could repeat it, but I like it.
and so when people are doing a pro forma, or like when my team's talking to me about buying these things, I'm like, okay, but be okay. You have to run your pro forma based on a long-term rental.
Yeah.
Because what if the city outlaws it? Like right now, the city of San Diego put the cap on short-term rentals. So there was an estimated 16,000-ish short-term rentals in San Diego, the city of San Diego.
Yeah.
And so they put this cap. They finally voted. It was a big drag-out fight. They're putting out 1% of housing stock. Mission Beach is the only area where it's higher. I forget the exact number they're allowing there, but more. And so it's going to go down to like 4,000 or 5,000 now. And so all these people, I think that's going to add to the rental pool, which will be a good thing because we need more rental houses.
Yeah.
But there's, I'm already seeing people starting to put more houses on the market that are using this Airbnb strategy because they want to get out before
it gets too bad.
Yeah, before that actually happens.
Yeah, there's a lot of worry, like where is that going to go? So you go buy in this other market that's not there yet, and then what could that happen?
Say that again. What do you mean?
Well, like, there's areas where you can go into this Airbnb business that don't have, those laws passed in that city or that county yet.
Sure. Yeah, you could sell and try to, duplicate it somewhere else. But
then who's to say that it doesn't come down the road?
Right.
That's part of the risk.
It could chase you around. And it's interesting. I love Airbnb. I use them like most people.
Absolutely.
It's one of the best things ever. I've stayed out of it from a long-term perspective, number one, because our mission is really important to me. That's kind of what fires me up about work is in our business is helping people stay in the game, build wealth through real estate, through a long-term hold strategy because they have a trusted manager. But also because we provide housing for people of the community. And so every Airbnb that's on the market
100%.
is one less house that a family or someone can live in, a single person, whatever,
Yeah.
long-term. And so, yeah, I think it's good. A certain percentage should be allocated to that. But I almost never hear politicians or someone else, maybe because lobbyists are good, talk about, well, wait, what about all the Airbnbs? Like maybe we should do, I guess that's part of what this new law is maybe, but
Of course, city planning, they have to decide how much housing versus putting up a new hotel versus putting up a
Exactly,
condo
right?
development. So
Exactly.
it's the same thing.
Yeah. So I don't know. That's just something, but Airbnb FOMO
But like any
is
business, there's always going to be threats. And that's what it is. You're not owning this so people ask me about investing in real estate versus the stock market.
Right.
This is apples and oranges.
Right,
This is
right.
apples and hammers.
Right.
Like it's not the same thing. You're running a business. And I was like, no, your decision is should you go buy a Subway franchise
Yeah.
or go into the Airbnb business, right?
Exactly.
What do you want to do? How do you want to work? Should you
Exactly.
go get a job or go get an Airbnb, so you can have you can leverage, you have to put in your capital versus a job, but hey, you can get a good return on it and you can manage it and you can make a lot of money, but you also have to deal with the problems.
Yeah.
In business.
Yeah. And I see a lot of those. I don't know, if you want to talk about some of those now, but
Yeah, I do. And I just wanted to mention too, on a side note, I was just thinking about one of the real key demographics I think that I find that could really use you are the people who are later into the retirement years. And a lot of people going into retirement kind of have the foresight to say, I don't want to be in this game anymore.
Right.
Like I've been playing it for 20, 30 years, or even in the last 10, I've made a boatload of money. I'm good. I don't want to deal with the headache. I don't want to deal with the market risk. I'm going to do some tax strategies and rebalance a more passive portfolio that doesn't take my time and isn't so concentrated.
Mm-hmm.
A lot of people decide, no, there's still a lot of upside. It has a great cash flow. I like owning real estate. I like managing. I have a great tenant that's been in there for years, they'll say, and so I haven't had any problems.
Right.
Like, okay, well, they're deferred. It's called
Yeah.
deferred maintenance.
Yeah.
Right?
Yeah.
Problems are coming. And so usually I see what happens is people 10 or 15, 20 years into retirement are like, okay, now I'm done. right?
Right.
I'm really done. I'm in my 70s, 80s. What should I do? And now we're dealing with a massive capital gains issue.
Yeah.
Right. I've depreciated the whole thing. Right. I bought it for nothing. I depreciated whatever I could.
Right.
Maybe I 1031 exchanged a couple of times. I've been rolling this thing in, and I've been saying, "Oh, I'm never going to pay taxes. I'm never going to pay taxes." Well, yeah, you are, unless you die.
Yeah.
And so a lot of people are looking at just saying, "I'm out. I'll pay the tax.
Right.
I don't care." But this is like a really good person, I think, to get to your group, right? Or somebody like you to help them, like, hey, we can continue to manage that, because that spreadsheet, when you look in the net equity that you get after taxes and real estate commissions and whatnot, like the rate of return you'd have to make somewhere else versus just holding that and having somebody else manage it for you is pretty compelling
Right.
to maintain.
Right. People in that position are they're not gonna sell. They've run it too long that way. They usually are not gonna pay that capital gains. They're gonna pass it to their kid.
I see a lot doing it though. I'm seeing more and more of that happening.
Of selling it?
Yeah. It's like, why don't you get somebody else to do all the work, and you keep the income, and
Right.
You'll probably make more money.
Yeah. Well, if they can find someone they trust, that's the big thing. It's like finding someone that can actually run the business, that does a good job, and can do it. And when you've been doing it yourself for so long, that's a really tough thing for them.
That's tough for us too as
Yeah.
entrepreneurs, right? I mean, you remember when you did everything, when you started
Yeah,
your company,
exactly.
and you slowly have to be like, okay, I'm not going to do that anymore, and you have to find those people you trust, right?
Right.
Yeah,
Exactly.
absolutely. Yeah.
Exactly. And there was a recent change. I think it was Prop 55, where they let you roll over your tax basis 3 times.
Yeah.
They changed it, but then they, on the back end, which was great, but then on the back end, they took away the exemption for inheritance. You used to be able to take the property and not pay inheritance tax, not have the stepped up basis, excuse me. But now you have that unless you occupy it as your primary residence. So we used to get a lot of people that had the property, inherited it from dad, and rented it because they got their old tax basis, but now it steps up.
It steps up.
Yeah. So it's
So
not
yeah,
a
on
good
those
thing.
inherited properties, those are like, you don't have to pay the taxes if you sell today.
Right.
Yeah. Depending on, actually, there's a lot of different things people do to mess that up, but we'll have an estate planning episode on another day.
Yeah, for sure.
So let's talk about some of we've kind of touched upon them, but I'd like to put a fine point to it, because these are, I kind of look at the list that you put together here, and I see this all the time. So what are the biggest missteps that landlords make that you find out there?
Yeah, no, it's interesting. When we were talking about this, I was thinking about it, and I made some notes, and I'm like, okay, they're all basically symptoms of one problem, which is not running it like a business. And
Not running it like a business.
That's like
Yep.
what they all come off of. And so the first one, like you alluded to, is not raising the rent. I mean, and especially now with recent changes to laws in California about, like, AB 1482 is a law they passed a couple years ago that says if you're a multifamily owner, there's a few other caveats, owned in a corporation, the building's over 15 years old, you can only raise rent 5% plus CPI. So there's like a rent cap, and there's also just cause, reason. You can only kick someone out for a just cause reason. So there's like some limitations there. So if your rent is like $1,000 below market because you haven't raised it in 10 years, you're not going to be able to get it back up anytime soon, because you can only raise it that certain amount. Like if it's like a duplex or
Really?
Yeah.
Wow.
Yeah.
That's interesting. I mean, that's still a big number in today's terms. I think that would be about 13%. But yeah, if you haven't raised the rent in 10 years, that's not getting you anywhere close to where you should be. Now, if you have a new tenant, does that still apply?
So no, if you get a new tenant, it starts over. So you can raise it to market, which is good for now, but
Yeah.
I see that changing,
Wow. Okay.
because that's how it is in San Francisco. And so,
Really?
yeah.
Okay. Yeah. And I get it, right? I mean, those kinds of things, better believe, are going to get really favorable really
Yeah.
fast.
Yeah.
Because a lot of families are really hurting with the price increases, that they're seeing with inflation.
Yeah, and the big issue with that, and one of the benefits of having someone else manage the property, no matter who it is that they're a buffer between you and the tenant, and you don't get emotionally invested. The reason you don't raise the rent is because it's Jasmine and Henry,
Yeah.
and they have the little kids, Scott,
Yeah.
and their dog, and you've been over there, and when a big gap for new clients of ours.
The toilet,
Yeah.
malfunctioned and Henry fixed it himself.
Yeah.
So here's a $15,000 discount on your rent.
Exactly. You know their story, and that's
Yeah.
why you don't rent to friends. One of the reasons too. That's
Yeah.
hard. And, ideally, it's not a good idea.
I guess you shouldn't rent. It's like you don't hire anybody you can't fire. And you
Right.
You don't.
It's like hiring friends. It can
says
work.
the guy who works with his wife. But,
Right. Right.
But yeah, you don't rent to somebody you can't. What's the word? Evict.
Right. Get rid of. But like that's one of the things that surprises people when they call us and when they talk about our process and like selecting tenants, for instance. They're like, okay, so I get to pick the tenant, right? And we're like, actually, we don't. We pick the tenant for you. There's a lot of reasons. There's legal reasons. You can't a lot of people think, oh, I want a family in this property. It's like, no, that violates fair housing laws, or like,
right.
Like, oh, I don't agree with that person. I want a self-employed person. Like everyone has their like
interesting
unique,
if you were running it like a business,
right.
you know that you would absolutely
right
shy away from that.
Right. So we talk them through that, and 9 times out of 10 people are right.
And all that kind of stuff.
Yeah.
Wow. Interesting.
Yeah. Like I don't want someone with tattoos. I'm an old school like there's all this like weird stuff people like have. But
man, that pool is shrinking.
That pool is shrinking. That's a bad example, probably.
No,
I haven't
I'm
heard that in
the
a long
pool
time.
Of people without tattoos.
Yeah, right. That is shrinking.
Yeah.
But everyone has their weird idiosyncrasies there. But they usually come around and are like, okay, cool. Once I explain it to them, but that's a big leap for them. And the big reason is that it's better if you don't know who it is.
Yeah.
If it they don't need to know too much about what you're doing as far as like maybe the ins and outs of each of the securities or whatnot.
Yeah.
Just like with raising the rent, if it's more of an arm length transaction and just let the person that's the expert like handle it,
yeah.
then it's more of just like a business decision. Hey, rents have went up 12% this year.
Yeah.
Okay, let's raise it 6 or 7, or
right.
Maybe keep it a little bit under market just for goodwill and not to get a vacancy, but. It's easier to make that decision.
Oh my gosh, I would find so much value in that, personally, that I had some professional that I knew was watching it that I can get updates with and get
right.
Here's what it looks like and here's what we should do. So
right.
All right. So not running it like a business, certainly. Some of the missteps in how you choose your tenants, right?
Right.
What else?
Right. So not planning for maintenance is a very common one.
Yes, I see that all the time.
It's
really... I look at those Schedule E's that
yeah.
people have on their tax return, and then it's just like, okay, there's nothing year after year. And it's like, how long have you owned this?
Yeah.
Like, there's a big bill coming. I don't know what it is.
Right. It's an interesting dynamic, especially from people that moved out of their current residence to rent it, because there's a phenomenon that happens with every property where the thing that never broke the 10 years you lived there breaks.
Yeah.
And, it's just like that thing, and then they also, it's never fun to like, there's all these little things you overlook as a homeowner that once you go to rent your property, you have to fix. And so there's like these
expenses. Right, because you're comfortable. You got used to dealing with it.
Yeah, exactly.
Yeah, you just jiggle the handle.
Exactly.
Yeah.
So we go through, we fix all that stuff, but then they're like, okay, cool. I spent, $3,000, whatever, fixing the property up. Mentally, they don't expect like another maintenance charge for like multiple years.
Right.
And just like your car needs service like every 6 months, and your car is like a horrible investment.
Yeah.
So we talk to people about that.
Not last year, actually.
Right.
You made about 40% on your car if you bought it.
Is that right?
If you bought a Ferrari 2 years ago,
no
you
way.
could sell it today and make
Cars
money.
Are going up.
Used cars went up 37% last year.
All right, I'm getting out of everything. That's a telltale sign
Dude.
that cars are a good investment.
Yeah, the first time in my career.
Wow. Okay.
Yeah.
But yeah, so we tell people plan for it, and don't get frustrated. Like the good investors, they plan for, between 5 and 20% of your annual rent for maintenance, depending on the age of the home, right?
Yeah.
So if it's a brand new home, 5 years old, 5%. But if it's a 50-year-old home, like put 15% into an account, and just like
15% of the rent
of the annual rent.
Yeah.
Into a buffer account. And that's a big, like when I first learned about putting buckets of money into different accounts, that was a huge level up for my life. Like, hey, I'm going to give this amount of money away. I'm just going to put it in this account I'm going to play with. So like having a separate account for your property is so important, and something most mom and pop landlords don't do.
Yeah.
It's like, just throw the money in there, put 15% in there. And then when it comes up, it's not like a headache thing. It's like, oh yeah, the garbage disposal went out. I got money for that. Send it. It's like, know. And so that's something that we very rarely see in people's calculations that they get prepared for, and either financially or mentally.
Yeah. And it makes If you do that, it makes tax time a lot easier too.
Yeah.
If you just have that one credit card or one bank account just designated for that property, it's all there. You can see it.
Yeah, 100%. The next one is insufficient insurance. Now, it rarely comes up, but when it comes up, it's so devastating. We had a house fire recently, and the owner was underinsured. He had like $250,000 in dwelling coverage, and he just hadn't looked at it for a long time. You know what I mean? And so making sure you have adequate, like the cost of building has went up so much. Man, another good thing, insurance. A good insurance person on your team, so invaluable. Like someone that can watch over this stuff and make sure. I used to have my stuff at like Geico, all these different things, and now I've got this one person. It's made it so much easier, but making sure that insurance is there for the dwelling and the liability portion.
Yeah, 100%. We talk about insurance a lot, for our clients. Not like we sell insurance or anything, but just it's like, what it's there for is to transfer risk that you can't retain.
Yeah.
And so we say there's 3 ways to manage risk. You can either avoid it. If you can't avoid it, like fires in California, a great example, right? Can you retain it? No, I can't retain just, having my house burned down, pay the mortgage and build a new one, right?
Yeah.
So I got to transfer that. It's interesting when we ask people, this year, hey, have you increased your homeowner's insurance? Like, I don't know. No, I don't think so. Has your home increased in value?
Exactly.
Has the cost to build that home significantly increased? I mean, so yeah, it's definitely something people to be. I'm sure the amount of people underinsured right now, not looking at it, is staggering.
Yeah, and most people think about the liability portion. They're like, oh, I want $1 million, and most heavy people have an umbrella on top of that. But that dwelling coverage portion too is something that's overlooked.
Yeah.
So that's another one. The fourth one's probably not treating.
Can I ask you a question on that?
Yeah.
So do you have your clients, right, property owners, do you have them like force their renters to get tenants to get renter insurance, or?
Yeah, so we require all of our tenants to have renter's insurance.
Yes.
$100,000 in minimum liability. So if they flood the place or something, you can use that first. So yeah, that's super important.
Yeah, absolutely. Because they don't, what are you going to do? They're not going to be able to pay you anyway. So if they don't have the insurance, in most cases.
And it covers their personal belongings. Like even if it's not their fault, let's say the neighbor above floods or something happens and it messes up their personal belongings. Most leases say that the landlord's insurance does not cover your personal belongings.
Right.
And so their insurance won't pay. Maybe the owner will out of the goodness of their heart, but usually we don't see that because it's in the lease.
Yeah.
And so having renter's insurance to cover for that is a real big benefit for the tenant too.
Yeah, I'm sure that goes overlooked. I'm sure very often, if not being managed properly.
Yeah.
Okay.
The other one is just not treating the tenant like a customer. This is very common from old school way of doing things. It's like, I'm going to show the property while I live here, and it's messy, and like you attract the type of people that would rent a messy or lived in place, or I'm not going to respond as quickly as maybe I need to. These tenants are renting the property, they're your customer, they're your paying customer, and so just kind of sloppiness around customer service and just not treating it like an actual business. We track phone pickup rates. That's super important on the owner level and the tenant resident level, and so we always want to have them have a 5-star move-in experience. We used to have a Glammy award, the Good Life Awesome move-in experience, because studies show, and the multifamily apartment industry has always been well ahead of the single family industry because they've got more deeper pockets.
Yeah.
But they've done these surveys, and most people, like the rate of them moving out after a year goes way up if they have a bad initial move-in experience. So that's another big paradigm shift. Most people think I'm going to show my property while I live in it, and then the tenant goes to move in and they assume everything's going to be made brand new. And so when they move in and they see the stain on the carpet and stuff, and so that's why multifamily has always shown move-in ready apartments. And so that's been a trend that's actually changed over the last 10 years is we show properties that are rent ready. Like this is how you're going to get it. And that way they can say yes or no. And there's less, issues about what they thought the condition might be. And it shows better. So you get higher rent and a quicker. So the idea is you might add a little bit of vacancy time, but you're going to get a higher rent, a better quality tenant that's ultimately going to stay longer because the moving experience was better.
Yeah. just like any business, I'm sure just, when you meet with clients, like setting goals for what we're trying to achieve here, like really helps you make good decisions.
Right.
And so like, hey, what do we want? We want the higher rent. We want the long-term tenant. Here's what we have to do to get it.
Right. Yeah. 100%. Especially if it's multifamily too, because the rents are directly tied to the value of your property and your ability to refinance.
Yeah.
So,
right.
So that's another big one. The other one is not inspecting the home. And, I know not if you're one of these people, don't feel guilty. Everyone's doing the same thing you are. You haven't looked at your home in probably 5 years. The tenant hasn't called. Like you said, you're deferring these issues.
Yeah.
Because the tenant not calling is not a good sign.
you know there's stuff happening.
Yeah, a lot of times it's because you're charging too little, so they don't want to tell you the house is falling apart.
Right.
Because they don't want you to fix, or they don't want to like rock the boat.
Yeah.
Right. So getting in there at least a year, once a year, we do an annual walkthrough. We do report with photos. You legally are required to test your smoke alarms as the landlord. There's another law they changed where you used to be able to put that in the lease and have the tenant be responsible for it. But landlords out there, if you haven't tested your smoke alarms in a year, that's a liability issue.
Wow.
Yeah, CO alarms, things like that. So,
Wow.
So just not getting in there is probably the other one. And then the biggest one is probably, especially now, is just not knowing the law. And I think that's why a lot of people are having us manage or other people manage now, is just the laws have changed so much and they've just gotten so complex that you really have to be engaged or get out or hire a property manager.
Yeah, right.
Yeah.
Yeah, and there is some new laws. Let's talk about that a little bit. And then it's just like we talked about it earlier. I mean, this legislation is not going to improve. I mean, it has all the signs of like, here's the changes that you have to stay on top of what's already there. But like the proposals of what's coming, it's like it's not getting easier out there for landlords.
Yeah,
especially if you're not treating it like a business. I mean, if you treat it like a business, great. You like doing it. You're managing real estate. You're on top of it, like being engaged, like you said. But most people aren't looking for that.
Right. Yeah. I mean, the legal landscape, we saw this coming. And honestly, it's better for my business when laws get more complex because people can't do it themselves. But yet I'm out there fighting. And that was something that was ramped up with COVID. Was I think a lot of people started to see what was going on and be like, hey, I'm going to like go down to my city council and figure out like what's going on, or I'm going to go to my school board. And so, I started getting more involved in things like that. And really voicing your opinion matters. Like yesterday, I called our local council member and our assembly member due to an alert because they're trying to pass a couple of bills. One is that if you sell a property, an investment property within 3 years that you buy, you have to pay a 25% capital gains tax in California. Yeah. They're trying to stop like home flippers. And I was talking, and the cool thing about calling your city council or assembly member is people actually pick up the phone, and for what it's worth, like you can voice your opposition. And I just tell the guy, I'm talking to the guy, and he's like, yeah, the thing is there's a lot of people are buying homes and just letting them sit vacant for like 6 months and then selling them for a profit. I'm like, really? I'm like, I haven't heard of that. Like, who's doing that? He's like, yeah, these big money people are buying these properties and just like waiting for the appreciation to go up. And that's a home a first-time home buyer could have bought. And I'm like, okay, well, if you're talking about, I haven't heard much of that, people letting it sit vacant. I know some foreign buyers that happens, like some Chinese buyers and stuff. But so I think it's important people get involved and stay up to date on what's going on. But there's just been a ton of legislation. It's not going to get better anytime soon.
Yeah. Interesting. And then during COVID, there was a bunch of legislation that kind of got passed too, right? That kind of hit landlords. I mean, how did you see your clients fare during that period of time?
So we got pretty lucky. I mean, I don't know if it was luck or whatever, but about 30% of apartments were delinquent during COVID. And we only experienced about a 7% delinquency. Wow. So we did pretty good. Overall, we ended up getting 99% of past paid rent back through some of the rent, the rent payment programs through the city and the state. Yeah. So that was good. There was AB 832 and SB 91, which, allowed tenants to pay 25% of the rent and then, defer the rest, until, they could get the rental assistance. Yeah. And so yeah, that was an interesting time, but we came out pretty unscathed. But they're still talking about maybe continuing. There's still a state of emergency, so they're still talking about continuing eviction moratorium legislation and things like that, which seems a little not necessary at this point.
Yeah. Yeah. Are you seeing any? So let's talk about the local San Diego market. I mean, kind of what are we seeing right now? I mean, if I just think of trends or things that I'm hearing is like California, kind of had a population decrease for the first time. There are people moving out, but I mean, it seems like we're having lots of inflation. I mean, what are you seeing as far as the rental market right now? And then the Zoom technologies, they're saying, which
Right.
I would assume could probably help San Diego. But
Yeah. I think San Diego, fared one of the best out of the major cities because it's a cool place to live. People started to realize that they wanted to get out of some of the areas like LA and San Francisco that had a little more draconian, laws.
Yeah.
And so, just rents are like red hot. They're up 10 to 28% depending on the area.
Wow.
In a year.
In the last year.
Yeah, in the last year. So it's just, and that's scary because if rent goes up 20% and someone actually, they're raising those rates, that's when the laws are going to get kicked in more. You know what I mean? That's why we need to solve the actual problem, which is allow more housing to be built. I mean, we had a great year for housing starts. I think permits, there was like 10,000 permits, which was like the most in, 10 years or something, but it's still half of what we need. By estimates, we need like 20,000 in a year. So we're still well below the what's needed. And so
I mean, the current economic environment is really not helping that. I mean, we have
Right.
interest rates going up, which makes it really hard for home builders.
Right.
And you have materials and labor going up. So
Right.
even if you are building more homes, those homes are going to be entering the market at a much higher price point.
Yeah, no, that's a good point. So migration did help. It increased demand. It lowered available inventory, though. High prices on the sales side are just forcing more people to rent.
Yeah.
So even though rents are going up, it's like, where are these people going to live ultimately? So it's
Right.
kind of a scary situation.
Yeah.
And yeah, just seeing a lack of inventory on the rental side. Our average days on market right now is like 5.5.
Wow.
So like we put something up, we rent it in like less than a week.
Yeah.
So that's kind of what's going on. I mean, locally, I don't know, like short-term rental change is probably a big thing that's going to add more units to the inventory, but that probably won't happen until later this year. And then, there's just like some like just cause eviction in San Diego is a thing. So landlords out there, if you have a tenant that has lived in the property at least 2 years, you can't kick that tenant out unless it's for a handful of specified reasons. Like you're going to move back into the property, you're going to substantially remodel or demolish the unit.
Wow.
So there's a lot of things that people just don't know about.
That's a proposal?
No, that's a real thing. That's San Diego
Wow.
just cause eviction law in the city of San Diego. Yeah.
Wow.
So
Okay.
yeah.
I think you have a lot of job security.
Yeah.
I mean, I don't know, man. Maybe you should be lobbying the local politicians the other way.
I
More
know.
laws for Steve and good life.
Right. Well,
Just joking. Obviously, I know how much you care about your tenants and real estate and making sure. I mean, you care not only about your clients, but you want your tenants to have a good life. And
Yeah.
that's why you named your company Good Life, right?
Exactly.
I mean, that's the whole point.
Exactly. And, I was talking to one of the guys from Cushman Wakefield recently, and he's talking about how much life sciences has just done so well in San Diego.
Yeah.
The business environment's great in San Diego. Apple's committed to like 7,000 jobs. Commercials, real estate's red hot. And so I think San Diego's a good place to be,
Yeah.
in the long term.
And then, I know we don't have that crystal ball. I don't know, I forgot it.
Yeah.
But, we're all looking at the market. I mean, we were talking a little bit about, we've had this 10% growth. It looks like it's all-time highs. Like, what are the cases for it going up or down?
Man, it's interesting. The most interesting thing about market swings, and I've only been in, a couple, is that when it swings overnight.
Mm-hmm.
It's like when the market changes in real estate, it changes literally overnight. Mm-hmm. And so it's not going to be this gradual thing. It's like just this thing that happens. And so be prepared for that. I don't know. And then once the market goes down 5%, nobody wants to sell their property at a discount.
Nope, but then it goes down another 20 and they all do.
Right.
Watch, man. People will buy high and sell low.
Right.
And when they go down 5, like it's a turn, likely, and they're going to say, oh, I'm not going to sell for less than what I could have had it for. And they're cling to that number, which is a fake number that didn't happen because you didn't sell it that day. And what it's worth today is what you have. And then the future is going to be some different number. Right. And maybe not the one that you're hoping for. Right. And that's what people do. Right. And then that's what we saw in 2008 so much. Right. And it's interesting, in the very beginning of the podcast, you're like, I don't know when it flipped, and people were looking at keeping their home versus selling, it's 2015, 2016. It's like, yeah, because 2006 was the high in the market. And most San Diego homes didn't recover until 2016. The average home didn't recover until 2018. So there was no conversation to have.
Right.
So, we have to be able to hold for long periods of time to really just, but, you said something earlier before we started the show. You're like, everyone's kind of talking about how this market has to come down, which gives you that contrarian kind of like, well, sometimes that's a sign that it won't, right?
Yeah.
I mean, if people are really pricing that in, so to speak.
Right. I mean, if you have a use case, like you're going to live in a home for at least 5 years, right? Like, how do you advise your clients on that? Like,
I say in most cases, think of it like a savings account for 10 years.
Yeah.
And whatever equity, whatever the value is, most 10-year cycles, I mean, there was 2006 to 16 was, a 10-year cycle. Some houses still hadn't recovered right fully to the average was 18, but most properties around here, recovered in that 10-year period. So you'd have to be able to hold. And the same thing happened in the 90s. Actually, if you bought a home in San Diego in 1990 and you held till December 31st of 1999, you made 1.65%. That's what San Diego homes did in the 90s.
Ouch.
Right? But, you weren't like horrible, but I mean, that's kind of what happens. You have these periods of time. So relate those two things we just said. Okay. So what happened after 1999 to 2006? The market took off, right? And it started to take off before 99. So, there was some 10-year fantastic growth rate with a recession in the middle in 2001. I mean, we just look at this stuff, and then you're like, okay, then what do we have? Yeah, we had a 10-year period of not making money.
Right.
And then what do we look for the last 10 years? Fantastic growth of 10% compounded annual returns.
Right.
So we do know markets crash. We do know markets go up and down. There's economic cycles. Real estate doesn't go up forever. So like we advise clients, put your 10 plus year window hat on. And if it's a place you live, who cares? Right. That's where you live. If you're thinking about making some changes to where you want to live in the next 10 years, this is a good time to assess your options. Right. Being mindful of not getting priced out because we don't have a crystal ball.
Right.
And there are periods of time where inflation will make, even though the real value you're not making that much money, but home values, rents are pegged to inflation. I mean, what could be inflation other than cost of living?
Right.
So, I think that, and homeowners are today sitting on these phenomenally low interest rates, which I spent a good portion of my life for the last 10 years trying to get people not to pay down their mortgages.
Right.
And they're starting to see why.
Yeah.
Some of them have, and it's like, oh man, now I got all this equity trapped and, it's just getting paid down by inflation.
Yeah.
So.
Yeah. It's, I advise people, like, if they're looking to sell in the next 5 years, now is probably a pretty good time.
5 years, yeah.
Yeah, I mean...
Yeah, that's way too short of a time.
Right, because I think, we probably would be experiencing a market, correction right now if it wasn't propped up by all the stimulus and all the,
right.
and the COVID, thing and all that stuff that happened. So,
sure.
So yeah, but the interesting thing is that Bruce Norris, who's a really smart, he's like the guru of San Diego, Southern California real estate forecasting. If you haven't heard of him, you could check him out. But he correctly predicted the crash of 2008, got all of his buddies like out in cash and, and so he's all based on data, and he's always looked at housing affordability as the metric for Southern California, at least.
Right.
And I think his number was like 17. When it hits 17, it's time to get out. And so I looked the other day, and Orange County's at 17 in California. But I've been listening to Bruce a little bit to see where he's at, and he's not convinced that same way he looked at it then, the same methodology would apply today. There's too many unknowns. So to answer your question, like what's going to happen with this market, it's like nobody knows. Even the smartest people with all the data still can't figure it out. But I think
and I'm just talking about the appreciation, right? Which is just part of it. So if you did go through that 90s and you made 1.65, and if you're levered, whatever, maybe you made 3 or 5, right? But essentially nothing. But you cash flowed your property, and you could have been making 3, 4, 5% during those markets. Those are more cash flow markets versus growth markets, by the way. Right. And so, you talk about the ways you make money in real estate. And so there's two components to it, multiple components, but it's not just the growth. There's the income that you receive too, the debt pay down and the tax benefits. And so if you can hold long term over historic, well, nobody has a crystal ball for the future, but if you look through periods of history, that's where we get really comfortable with that 10-year mark. Right. It's being a really conservative mark without any market timing.
Yeah.
It's like you can handle either one,
Yeah, I think it's smart. But I was walking through Claremont the other day, which is by my office, and I walked by a 4-bedroom, 2-bath, about 1,400 square feet, and it was listed for $1,050,000. I took a picture of it, and I'm like, this marks the beginning of the end because this house used to be, oh man, not 4 years ago. The house was $500,000.
Yeah.
And so I don't know, but yeah, I like long term. I like to keep things simple. I like to dollar cost average. And not worry too much about that.
Man, wealth of knowledge today. Steve, thanks so much for coming on, man.
Brother.
It's great having you. I'm gonna wrangle you back here pretty soon.
Right on, man. Love to come back. Thanks
awesome.
So much.
It was a lot of fun. Everybody, thanks for joining us on the Presidio Perspective. Enjoy the weekend, and we'll see you next time. Take us out, Sierra.